All right, looks like we set up. Let's let's see. You call that? It's been some time since I've been back on YouTube. Okay. First of all, I need to see if you're working good. I'm gonna turn you off. My channel. I got my headphones and it wasn't even connected. Okay, let's go. Let me just turn you off. I'll put this at everyone. What do you mean publish? Oh no. Okay. Yo, give me a sec. I'll be right back. Hold on. Damn, what? Everything's feeling foreign to me right now. Like, hold on. I'll be right back. I'll be right back. I want to make it a thing. I'm trying to figure out how to Ah, there we go. There we go. Finally. Finally. All right, cool. I'll be right back. Pop, pop. Eat. Yo. Mm, 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 mm. All right. So, okay. Finna walk on, walk on, walk on. I'll get right. I'll just get right into it. So, look, the movement of price. I am just gonna be strictly talking about the movement of price. I literally just ended my trading day, $500 in profit. I mean, just yo, corrupt. Well, go on. But yeah, I literally just ended my day in profit live. Um, in my that's literally for my group. So, but right now I'm here on YouTube. Now I want to show you guys what structure is about. So we're on a 1 second chart, and this is how I learned structure the fastest on the 1 second chart in New York. So I'm finna just do the same shit. So I zoom all the way out and I'll just go back until I see where we are. And then I can see this low got taken. We've been going down, going down. Okay, cool. So This is a protected high. We have the 50% of the range, and now this is the initial break. Hold on, no, that's a lie. This is the initial break. In fact, can you guys, let me make sure you guys can, okay, cool. That's the initial break, and now we start counting our swings. So 1, 2, now, as you can see, this swing here is on the same time frame as this swing here. This, so okay, these swings belong to the same time frame. So how you wanna count your swings is that, especially if you wanna learn how to anticipate price movement, is you wanna count your swings on the current trend or the current extension or the current leg. That's how you anticipate the reversal. And as you can see, we had the initial break here. Nope, that's a lie. This initial break, I don't count the initial break. I always count my swings after the initial break. So we have 1, boy, I'm just clicking everywhere. We have 1, 2, 3, 4, 5. Oh, and what do we see? We see a reversal. We see a body closure above this high. So we know that it's usually 4 to 6 swings and we reverse. So if you want to start looking for counter trend moves, the best way for you to engage in a counter trend move is after the 4th to 6th swing on the current price extension, the current trend, on that trend down. That's the best time for you to anticipate a reversal. So we'll just do the same shit over here. We got the initial break, and then on this extension down, we see 1, 2, 3, 4, and now we're ranging, really. I can't lie. Right now, this zone, okay, cool. So this zone that you see right here has been mitigated multiple times. Ooh, So look, check it. We are currently at 4 swings down from this current extension. And price has mitigated this area, this zone here. One, two, fuck that. We had a body closure right there. And then price came back into it once, twice, 3 times, 4 times, 5 times. So within these zones right here, what you usually see, a common behavior of what price does around this type of characteristic is a violation of the zone and a trade back into the range that broke it. This is a concept that Dave talks about. Mitigating a zone multiple times is really, really simple, but this is like your first step. Are you able to make a living off this? Of course, my G. Why the fuck would I be wasting my time on this if I couldn't make a living off this? What? I'm reading Christ for fun. Huh? What? Nah, bro. Nah, look, listen. You can make a living off this, bro. That's the whole point of learning how price moves first. Now, there's some people that make a living off, what do you call it? Their system without even learning how price moves first, but they find it unsustainable. They believe in losing days. They believe in losing. You have to be a good loser. What the fuck? I don't know what the fuck they talking about, but I don't subscribe to that belief system there. I believe in winning. And that's what I saw after while back testing my system. So look, we see that price. So let me just so yeah, we've got this zone. So my anticipation is this, by the way. I'm looking for that. But as for current price action, it's literally the same thing over and over again. So what do we see? We see a high time frame range. Price breaks below it. Now, within this range, there's another range within it. And once we had the initial break, actually, no, no. The initial break happened here. And you see the current extension down, the trend down. We have another pullback here, another pullback here. So we see 1, 2, 3, 4, and a reversal. What do we tap into? The 50%, and we leave. We tap into the origin and we leave. Now, granted, price is still in the downtrend, so this can see a liquidation below this low. But I'm still, keep in mind, I'm on a 1 second, by the way. So structure is created and broken, created and broken, created and broken, created and broken, created and broken. This is the best time frame for you to learn how to learn structure. And the best time for you to learn structure is during New York session. Well, for Nasdaq anyway. But whatever pair that you're trading, I'm sure you would know the most volatile time for that pair. You would pick that time to go onto the 1 second and learn how structure develops. You just watch it. You watch it. And trust me, the more you watch something, the better you are to be able to pick up patterns of behavior. And the more and more you see something, the more and more you will be able to learn how to engage with it, learn how to anticipate it. You're seeing this over and over and over again. Don't think that, you know, it's completely, I have no idea what's going on. What video should I start to get? With the basics, my G, in the description of my videos, I always link the original masterclass that I learned from. And it directs you straight to video 3. I did that on purpose because I believe that video 3 should be the first video that you watch. Structure. So go in the description, you'll see watch the original masterclass, the original DTFX masterclass, and get onto that. Get onto that. So now we're ranging between, so no, look, now we're in a range. When we're in a range, we range between an area of supply and demand. That's basically what a range is. Basically. An area of supply, an area of demand. If you want to put it in DTFX terms, it's basically the origins of each move, the origin of the move that sent price down, the origin of the move that sent price up. Now, I'm still looking for, yeah, no problem, bro, no problem. I'm still looking for a violation of this zone above here. So, as well as, yo, when you're learning structure, you want to learn structure zoomed out the way I am, because you want to be able to understand the bigger picture. Once you're able to understand the bigger picture, once you're able to even anticipate price structurally like this, that's when I recommend that you get down into candlestick structure. This is candlestick structure. You zoom in to the point, not you don't zoom in like this. Well, I can't lie, I do trade like this. But when you're learning, you want to just zoom in to the point where you can see the wicks and the bodies clearly. Oh boy, and this is when your learning is gonna accelerate. Oh my days. So let me just look. That's a 50% we tap into, but that's the origin right here. We see us break structure. And two to three on a reversal, right? This is the extension. This is the retracement. So on the retracement, you can usually see 2 to 3 swings and then price fall to take out the low. So that's another aspect on counting swings you want to recognize too. Now, oh, oh, is that, oh, what did we just do? Oh, oh, what do we know? Equal highs. Oh shit. Equal highs. Take out both lows. So in an environment like this, you wouldn't be buying. You wouldn't be buying in the zone because the narrative, what structure is telling you, what price is telling you is that, yo, you don't want to be put in a buy position below these, above these lows here, above that first low that was responsible for putting in a high, because we've been failing to go above. Wait until we take out the first low responsible for equal highs. And when you see price break out of a range like this, what do? You just start counting your swings. That's it. Just start counting your swings. You don't have to be right. You just need to follow price. That's it. You just need to follow price. So look, we took out the inside low responsible for that second high right there. And the next target is this right here. Now, of course, we are at the bottom of the range, so shorts are less likely. So yes, we can see some up movement to where? To the 50% of this zone here, left unmitigated, if price does not want to just do this straight away. So always keep that in mind. So let's see what price is doing now. And yeah, I basically I gave you guys an introduction to just structure what price has done. But now we're going to start following what price is doing in the current moment. So we ended up taking this low. I told you this is the target right here. We just took it. It just got took it. So I'm gonna erase. No, I'm not gonna erase all these drawings because I'm gonna lose track. What I will do is start counting my swings. We have one. No, that's a lie. So we have this higher time frame swing, I'm gonna make it a different color. Up here, I'll make it purple, just whatever. This is one swing. Now, as for the current extension, the current trend, boy, nah, this is getting a bit messy. So I'm just gonna do this, yeah. I'm gonna remove this. Yeah, all right, cool. Let's just do that. Look, we have this swing up here. We see your body closure below it. What do? You start counting your swings. We have the initial break. I start counting my swings after the initial break. So right now we are only at one swing. So a counter trend move, anticipating a counter trend move, the probabilities are less likely. So boom. Now you want to see your body closure before even considering this to be the second swing. Because right now it's just a failure, making this high weak. So what you would do is anticipate a closure, not even a closure, it doesn't have to be, but just has to be, you would anticipate price to trade here. Oh, look at that, the 50% of the S&D responsible. We already tapped it. But look, we failed to put in, so Dave talks about the 50% of zones, right? And the S&D responsible, the first tap breaking structure, and the second tap makes a double top for a longer move. But you know that's no longer valid when that first tap here does not break structure. Now you'd be waiting for your move at the origin. You'd anticipate the failure of the S&D responsible, and when the S&D responsible fails, price usually steps into the origin and makes a shift away. And from there you would, you'd see what go on. Now, we step into the origin, we don't get that, that's fine. Now we just created a higher time frame swing on the top, on the bottom, right here. And you literally shift. You follow price. And remember, your larger swings give you your directional bias. Your larger swings. So look, we're in a range. This is the supply. This is the demand. The origin of each move. The market is literally just going from range to 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 range. I told you guys I'm still anticipating this to be taken out because on a higher time frame, even though you guys can't fully see it, we've been mitigating this area multiple times. So let me just drag it. And when we take this area, I'm looking for a move back inside the range. So what range am I talking about now? I'm talking about this range here. This is the range that caused price, if it does, to move up above this zone. You guys see how quick this is? You guys understand how, what you call it? You guys understand how quick you can learn how structure moves like this? This will only accelerate your learning, and I encourage you guys to do this as well. Now, cool. We tap the 50% of the zone and we see a shift out. What does Dave talk about? The one-to-one, right? Did it not? It just delivered right here. Look, 50% one-to-one. What's a one-to-one? In the zone, out the zone. 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 50% out the zone. 50% out the zone. That's a one-to-one. Still looking for it to take out. But check it. Uh, shit. I mean, ain't shit going on right now. I'm gonna check candlestick structure, and it's the same principles, right? Okay, cool. You know what? I'm gonna chat about this. This is the top of the range. You're not longing at the top of the range. Like a way that I identify whether we are at the top of the range or not, I usually just mark out the origin right here, the origin of the move that sent price down. And if price is above that level after breaking the higher time frame range, then that's usually the top of the range. I like to see my moves below this level. So now I'm anticipating price to move back inside this range. As for when it will, I don't know. But this is the range I'm looking for price to move back inside of. Right now, because look, these zones here are not part of structure. You're not using them. Zones that are not part of structure don't hold. So at the very least, we can see these zones fail. So let's see how structure develops. We're currently in an uptrend. So I want to chat. I want to say this as well. In an uptrend, that first break that you see, so you're trailing your lows, right? Your protected lows. That first break that you see, especially if we're not in a POI in a zone to the left, that first break that you see is usually fake. It's just a liquidity grab to go higher. Now look, I'll be real. I don't pay attention to zones too much while I'm actually trading because I just trade structure. You need to understand how structure moves first. Okay, cool. So we got the violation of the law. Now, what you can expect is a violation of this high. Now, if price does not violate the high and continue to go further below, well, then my anticipation is that we move back inside this previous range. We end up at least taking out these lows here. Well, not yet, at least. Shit, price is just equals. Damn, I spoke too soon. Shit. I spoke too soon. Never mind. Never mind. Never mind. But it's the same thing. Check it. You count your swings. This is the initial break. You just count them. Just count your swings. So right now we're at one swing, and we observe what price does. Now, it's not to say that you guys should be fluid with your analysis. You shouldn't stay fixed with your analysis. Yes, 4 to 6 swings on a reverse, 2 to 3 swings on a reversal. But at the end of the day, price can do whatever the fuck it does. It will sometimes it's not always 4 swings and it reverses. Sometimes it's not always sometimes the rules that you expect, the rules that you that the rules the rules for you to engage, the rules for you to engage within the highest probabilities of price moving in favor of your direction. Because it's patterns of behavior. But we know that behavior can be inconsistent at times. Why? Because what you're seeing here is human behavior printed every second on the chart. So make some leeway. Make some leeway. Price will not always do what you expect it to do. That's fine. You continue to follow price. Why? Because the market's right. The market's always right. You let the market lead you. You don't lead the market. Nitin, well, go on, bro. Welcome to the stream. Welcome to the stream, G. So look, that first break, if you're chasing sells, you're in drawdown right now. What did I tell you guys? That first break can be fake. Pay attention to that. And the second break now that you guys can see, which most likely will happen at the 50%, that's the real move. So let's continue to observe and see what price gives us. So price didn't end up taking out this low. That's fine. But, it still matched the idea of what I had over here. Okay, we got that there too. Let me just drag it. Now, when you're learning price, I will emphasize, when you're learning price, you want to pay attention to every single reaction from the market. So that means going back to the left to see what did price react from. But when you're trading, you only pay attention to the right side of the chart. You don't pay attention to the left because it will skew your perception. You know what? I'm going to just talk for myself here. It skews my perception. It skews my analysis, and it leads me to premature decisions. So that's why I don't look to the left while I trade. But when I'm learning price, while I'm learning how price moves, yes, you want to be able to figure out, why did price react from this point? Why did price react here and there and there and there? You want to be paying attention to the left side as well. And when you see the left side violated and you see that there's no reaction from it, you go back to the left. And then you ask yourself, why? Why was this zone invalid? Likewise, if this zone was valid, you still go back to the left, even though you marked out prior, and you burn into your brain, what type of environment was this swing in? You note that down. So, yeah, we're currently trending. You're trailing your highs, your lows and shit, right? That's a protected low. You have the S&D responsible. See a shift off. That's our protected low. So in an uptrend, you want to be trailing. And we end up violating. Now look, that means this zone did not provide a move down. Why? Why did it not provide a move down? Well, the tap of the zone provided the move. You want to know why? Because when you pay attention to the right side of your chart, you're counting your swings, right? Because if you're anticipating a move from the left side, that means you're counter trending, right? So when we count our swings, we see one, that's the initial break. That's the second swing. Oh, we're not at 4 swings yet. Oh. So no wonder this zone didn't hold. And this is the importance of counting your swings. Because counting your swings allows you to, it stops you from entering the market. No, it stops you from entering counter trend moves prematurely. We trade high probability moves. So that's that. This is the current swing. What you would anticipate is a 50% of the move. And don't get it twisted. There are ways to engage with price when it doesn't tap into the 50%. Yes, there are ways, but when you're learning, you need to start here. You need to start here. You need to observe price when it doesn't tap into the 50 and it leaves without you. Trust me, you need that experience to move on to the next thing. All right, cool. So we're in a range, told you guys. A range is just an area of supply, area of demand, right? We have this swing here, but you guys see that already. That's the 50% of it. We have the 50% of this zone too. You only take shorts at the top of the range. You only take longs at the bottom of the range. And yes, this can be identified through a specific candle. But when you're learning, how I learned was that you wanna, since you're using the 50% of the zones anyway, consider the bottom of the range to be the 50% of the swing and below it. Consider the top of the range, the 50% of the swing and above it. And then consider the area in between the middle of the range, where you do not execute either side of the market. These are rules you need to backtest. I'm going through a lot of shit right now, but this is the best way to just deliver so much information efficiently. This is the 1 second chart, my G. So if there's anything I want to drive home, it's to pay attention to the current trend. Pay attention to the current trend, not the trend from the past. The current trend. And allow your decision to anticipate to be governed by the swings, the counting of your swings. Start there. Start there. This is just the beginning. There's so much more I want to talk about, but you need to start from somewhere, and I'm giving you guys the start now. So what is the start? Let me get the path tool. I can't find the path tool. Am I blind? There we go. What's that? 1, 2, 3, 4. What's that? 1, 2, 3, 4. Boom. I just I just delete. Okay, cool. I'll just do that again real quick. This is a start. I'm gonna show you guys the start of what you should learn. What's that? 1, 2, 3, 4. Then we break. That. Bro, I did it wrong. Let me just do it cleanly. Don't worry, don't worry. I'm gonna land. Let me land, didn't it? So, so that's 1, 2, 3, 4, reverse. 1, 2, 3. I did it wrong again. I'm literally gonna combine everything, right? So it's gonna be like this. Duh, 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 duh. So that's 1, 2, 3, 4. You get your reversal. That, and then you get a volatile break. You get 1, 2. Wait, no. If I do 1, that's what you usually see. And then, oh my days, bro! Fuck's sake. I'll just make it smaller. Don't worry, I'm gonna get it. I'm gonna get it right. Hold on. 1, 2, 3, 4. Then you see a reversal. Then you see a volatile break. Like this. Then you see that volatile break shift structure, but that's fake. And then you see it continue to create structure. And then we wipe these guys out and we move back in. Yo, thank you. Finally. Jeez. So look, this is where you start. You start by counting your swings. Four to six swings and you reverse. You don't count the initial break. You count your swings after the initial break. So this becomes your protected high. I should have put, watch video 3. Video 3 explains protected highs and lows. Like, I shouldn't even need to explain that. I'm giving you guys the stuff that's not, that's not fully explained in the original masterclass. So if you want to know what a protected high and low is, it's in the description. Watch video 3 of the original masterclass. So after the initial break, you start counting your swings. But then you start to see lower time frame swings occur here that are not on the same time frame as these two swings here. That's a market sell model, but I got no idea what the fuck that is. But alright, cool. So look, usually in a volatile trend on the way down, that first break are people that chase price. They get stopped out. And then the people that stopped them out, they get stopped out too. So I want you to observe these things while back testing. This is really rough, bro. It took me like 3 tries to even draw this diagram. This is the first time I even done a diagram. whatever, right? But I want you to observe these things. I'm going to delete all my drawings now. I'm going to head back into current price action. And if you guys just were to follow that, then trust me, that would speed up your learning. But you first need to learn, of course, your protected highs and lows. Watch video 3 first. And then what the information I just told you guys to start from, the anticipation, that's going to lead you into narrative building. Now you're learning what happens when structure is created and destroyed, created and violated, created and liquidated. You're going to learn the patterns of behavior and what to expect when structure is created. Not just the mechanical way of seeing, oh yeah, it's a protected high, it's a protected low, I'm just looking for a shift. By observing those patterns that I just told you right there, you'll start to see when the real move happens. So we tap the 50%, do we get the 1-to-1? Yes, we do. What else did we tap? Because I can't lie, I wasn't keeping track of price still. Okay, cool. I want to dive into this topic here. You see the S&D responsible here. Yes, we've been liquidating it. But I want you guys to know this. This is the current, let me make this. I want to talk to you guys about wicks. Real quick, just real quick. This is the protected low. This is the protected high, forming this range right here, which is also considered to be the demand responsible for breaking above the previous protected high that put in, whoops, this low. Now, when you guys see a body closure, so the time frame that you're on, the time frame that you analyze on, not execute, I didn't say execute, even though it does apply to executions as well. But really, when you're analyzing price and basing a decision to even make the decision to execute, when you see a body closure below a higher time frame swing and an immediate shift into it, that's a wick on a higher time frame. Just so this type of price action here, so this is a down candle, I'll just put an arrow there, and this is an up candle. When you see this type of price action, this is a wick on a higher time frame. So on the time frame that you're trading on, it may look like price violated the S&D responsible, but in actuality, it did not. Because the time frame that this swing even comes from doesn't belong to the same time frame as, that's not even the S&D responsible. Jeez. Well, on a lower time frame, this is the S&D responsible. So on the higher time frame that I'm talking about is the 1 minute. This is, you know what? Why am I even guessing? Why am I even guessing? All you have to do is just get the ruler. This is from, damn, 20-second time frame. So this is the S&D responsible on a 20-second time frame, which usually on the 1 minute looks like a hidden S&D that's made to get what? Liquidated. Now, I can't lie, that's advanced, isn't it? But you even in the playlist, Dave talks about it. How do I know this is from the 1 minute? I just, when you see price so long, until the break, this is what? 2 minutes? You guys see that? So that's how I knew that, okay, cool, this zone here is the S&D responsible on the 1 minute. And this right here is the hidden S&D on the 1 minute. So yeah, I talked to you guys about wicks and so this is what it looks like on the lower time frame. And of course, this is what, a wick looks like on the higher time frame. So cool. Let's continue. So we've been moving up. We've been moving up. What's this? See your body closure. That's a failure, by the way. I just told you guys about wicks. This time frame here. So look, hold on. Boom, 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 boom. Break. Okay, cool. This supply is still holding. I told you guys, when you see this type of price action, this characteristic within candlestick, you know that price was only up above this area for literally 1 second. I'm on a 1 second chart. Literally 1 second. And then it took 2 seconds for price to come back down within the range. So you know that's a failure. We now know that this low is weak. It's a weak low. They get taken. The protected low on the 1 minute time frame is right here. Well, consider it a valid low. That would be a valid low on the 1 minute time frame because we didn't get a body closure. Now, how do you determine whether or not price actually breaks structure on the time frame that you're trading on? If a wick looks like this, then what does a body closure look like? So so a body closure on the higher time frame, the way it looks like on the lower time frame, so this time frame that I'm trading on, when you're zoomed out on structure like this, and you're not on candlestick structure on the higher time frame, what it looks like is a consolidation at the top of the range or bottom of the range, depending on you're looking for, a higher low to be taken. It looks like a consolidation and a break out of that range. Usually, that's when you see the body closure on the higher time frame. So you see how the consolidation starts where price trades up, we see a body closure above on the given time frame that you're trading on, that you're learning structure from, and then we see a valid low taken, and we enter into a pullback. This is the range that we're in. This is the consolidation that we're in. Now, when you get that body closure above the consolidation, now that is usually when you see the body closure on a higher time frame on candlestick structure. So in this case, that would be the 1 minute. That's how you determine that. Now, when price does this, it will be a better example for you guys to show. But I'm just letting you know how to anticipate it. We're currently ranging though from this S&D responsible is currently holding this. Oh yeah, this is currently holding, but we are on. Okay, cool. Check it. How many swings do you guys see? One. Oh, obviously you guys can't see it because I wasn't there, but we have 1, 2, 3, 4. What do you see price start to do? Consolidate. Oh, what can we expect? A reversal? Hmm. I don't know. We have to wait and see. But my target, if it's not at this fourth swing right here, I told you guys, price can also make a fifth swing and a sixth swing. It's not always at the fourth swing, but it's after the fourth swing that you start to anticipate a reversal in price. And I told you guys, this was a failure. So when you start to consider narrative two, a failure to close above this high, you start to piece things together. And now you can build a discretionary approach to engaging with price. And you're no longer relying on the mechanical side of it. So I just wanted to hop on, just give you guys this, I want to give you guys a start. This is exactly what I did to learn structure. I was in the 1 second chart. Now, I wasn't back testing this time. I was still in the phase of, yeah, I can just, you know, apply what I learned in the live markets, you feel me? I had that type of mindset. I wasn't back testing at the time. So I was literally trading on the 1 second chart. Yeah, I was losing all over the place. Yeah, I was losing all over the place. But regardless, it took me a month to learn structure that way. So what I was doing was London session. So this was my routine. I would trail Asia session. I would be on the 1 second time frame, trailing Asia session for like an hour, and I'll go to bed. Asia sessions, like I'd start at midnight, go to sleep at like 1:30. Then I'd wake up at 7, do my hygiene and shit. And then I would be trailing London session from 9:30 to 1 p.m. on the 1 second time frame, just watching price. And that right there, you see how it just broke out of this consolidation? That's your body closure on the high time frame. So, and then I take a break from 1 p.m. and then I'd start trailing New York session like I am now from 3 o'clock to to the close. That was my routine. And then I'd back test two. Hey, Hunter, what's good, bro? Hey, listen, I'm literally about to hop off right now, but hey, you came out good time, my boy. Shit. Yeah, man. Yo, you guys definitely go to Hunter's channel, bro. Bro, his analysis is just, it's just, I'm telling you, bro. Yo, you guys definitely check him out. When it comes to price action analysis, trust me, you will learn a lot from man, innit? So, yeah, man. Man's out. I hope you guys learned a lot from the session. And I'll catch you guys maybe tomorrow. Maybe. Oh, shit. The market's not even open. So it's Friday. Oh, shit. It's Friday. Yeah, so, yeah, Monday. Monday, I'll come. And I'm going to start. It will be more structured. I just hopped on. I didn't even know what the fuck I was going to talk about. But starting Monday, I'm gonna start guiding you guys on how to see structure. That's what I'm going to focus on because that's all you need to be profitable. but you need to get that down first. Structure is the most important part. Dave teaches Dave teaches about structure, but you know, his playlist also talks about zones. His playlist also talks about um I can't lie, I think it's just structure and zones. I'll be real. But you need to understand that you can be profitable without even trading zones. I don't trade zones. I only trade structure. That's all I need. So that's what I'm going to focus with you guys. I hope you guys enjoy the stream. Catch you guys next time.